Hello, 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 ladies and gentlemen, boys and girls. Welcome back to VE Universe. I'm your humble host, Victor V, bringing to you another amazing content. Today's video is for educational and entertainment purpose only. Due diligence must be taken by anyone investing in the stock market. Why? Because the stock market comes with some risk. So do your DD. Let's talk about Cciv and Lucid Moto. What a bear, what a bull, what a hype, what a dip at the same time. All over the news. It all started with the Romo. Then you have the definitive agreement. Again, just so you know, we are talking about ticker symbol Cciv, which is the merger between Churchill Capital and Lucid Motors. You know, after the definitive agreement, what happened? We all saw the stock price drove right up to $60. And then after some misunderstanding, it dipped down to almost $20. And that's all because of the actual valuation, which wasn't correct. And there was also some delivery issues, which we will be talking about. So there was all this confusion between institutional and retail investors. Some were cashing out while some were jumping in. FOMO, FOMO. Some people were, the fear of missing out. People were buying at $60. People were even buying at $64, thinking it's going to go up. But after the definitive agreement and the re-evaluation, guess what? It starts dropping down gradually and until it came right down close to $20. I understand the feeling, as an investor. A lot of people are now carrying this back, including myself, because I bought, I didn't buy at 20, I bought when it was still up there. But remember, you don't lose if you don't sell. If it's a company that you think got value, just like I think that it's a very valuable company, when you keep holding it, guess what? With time, it will go back to where it belongs. So let's be optimistic and look at the future. So today, I'll be looking at some of the catalysts, the driving force to figure out what's the future for Cciv. And then we're also going to hear from the CEO, Peter Rawlinson, during an interview with Jim Cramer to know what happened with the evaluation of the company. And then we'll do a data analysis looking at the charts. So right in front of me, we have a list of catalysts for 2021. This is what every investor should expect to see happening. We already have the program. It's right in front of me. So the first we have is March 17. There will be an announcement coming with Dolby. This is audio system internally in the vehicle. So that's it. We're going to look out for that. That might be another catalyst to drive the price up. We also have in Q2, which is April, May, June, any of those days, re-entering of EV federal tax credit. So you get an incentive of buying an electric vehicle. We have the ARM2 announcement, which is, the factory that they have in Arizona, Casa Grande. There's an announcement coming in. It's already approved for an extension. We also have autonomous software news. There was rumor going on that there will be a Silicon Valley company coming in. Most people were thinking Apple might be one of them. We'll have to wait and see. And then we have June 30th. The ticker symbol is changing from Cciv to LCID. That's a very important one because when the ticker symbol changes in a SPAC, there is probably up to a 10% move. Production will start. July 1st, you have Lucid Air review. So customer will start giving their review. That is good because they will look at it. Is it what was expected? Was that the plan in action? So you will have some review. Very, very important. July 3rd, you have delivery report. So now you have a complete report on the production and whatnot. But the most important, first customer delivery. First customer delivery is the most important. So August 1st, your shipment will start. When shipment start, that's a game changer. A game changer, why? Because now there is official product. When they start selling product, what will happen? Product is the exchange. Money will come in and that will drive the share price up. And then when you scroll down, we still have report, Q3 report still in October. And you know, it moves on and on and on. So this is the complete program. This is what we should be looking for this year when it comes to the catalyst, which is the driving force of the share price. So now, why don't we head over and listen to what Peter Rawlinson have to say during an interview with Jim Cramer regarding the evaluation of the company. My YouTube analytics shows that over 75% of my viewers are not subscribed to my channel yet. So please press on the red juicy subscribe button and smash the bell icon to be notified anytime I upload a new video.
Peter, one of the things I think our viewers, they're so excited. They wanted a piece. They bought Churchill. When you try to figure out a price, did you say, listen, you know what, we're every bit as good as Tesla, if not better, but we're priced underneath Tesla, so therefore anyone who thinks that this is overpriced as a stock is missing the big point, which is we have more technology, we have faster charging, we got a better car, and we're cheaper than the stock of Tesla.
Well, I think there's a gross misunderstanding on the market, actually, Jim, because actually the price, the acquisition price of Lucid from Churchill was $11.75 billion. That was a snip. It was a great deal for Churchill, but there was a quid pro quo. Churchill brought this incredible array of the bluest of blue chip companies to invest in us, with long-term commitment, with a lockup and a commitment. And those companies provided we were oversubscribed for the PIPE. So we actually expanded the PIPE, and the PIPE sold at $15. And this is unprecedented in the history of SPACs. So this is why I'm so buoyed that so many of these savvy investors, blue chip companies, could see the long-term value potential, and that lies in Lucid's technology.
Yeah, and Peter, I mean, to that point, you did sell 16% of the company to CCIV shareholders, and to your point, the PIPE holders will own about 10% at 15, which is 50% more than those who invested originally in the SPAC at 10 have paid. Yes. But that said, you still sold 26% of the company at a discounted value. When I say that, I mention it because you might have just gone public the traditional way. There seemed to be great enthusiasm for your stock and your product. Why did you still choose to go this way?
I think that this has enabled us to secure our future. We've raised over $4.5 billion. This means that we can accelerate our business model and in a secure manner. And this is really important because the whole world needs to move to sustainable mobility with technology. And this means that Lucid can be at the forefront of this new movement. The world cannot wait. This has given us security, commitment from long-term investors, and we've been augmented as a company by the illustrious roster of luminaries that Churchill Capital has assembled, which provides a whole new dynamic and dimension as we grow the business going forward.
To know and understand which stock to buy, which is fundamental analysis, to also know when to sell the stock, which is technical analysis, plus one-on-one phone call with me and a portfolio update, join my Patreon group, link in the description below. We just heard from Peter Rawlinson, the CEO, talking about the evaluation or whatnot. So now we are taking a close look at the data analysis. So we are right here in front of, Google. So as we can see, market cap 6.93 billion, 52-week low and high. It all started from $9.60 right up to $64.86. You know, if we look at it right now, the price is $26.77. So from Friday, it was down 0.060 at 0.22%. Aftermarket shows a little bit of progress, $26.87. So again, we already talked about some of the catalysts that we should be looking forward to. We might see some progress. I think it's a very valuable company. You just have to hold on for some time. Just think of it as buying Tesla 3 years ago. That's exactly what, this company is all about. When you look at Lucid Motor, they have the vehicles are pretty much the same like Tesla. They even have more horsepower, over 1,000. When you look at their range, 503 or over 500 a mile on a charge. So it is a very, very good company. If you're new to the channel, please subscribe and press the bell button to be notified anytime I upload a new video. Drop me a comment below. What's your thought? Do you think it will move up to $50, $60? Or what do you think? What's your thought? I would like to know. Until then, I will see you on the next video. Have a nice day. Goodbye now.